Hello there, and welcome back to my YouTube channel. James here as ever for today's video on Management Accountancy, the F2 ACCA exam paper, and I'm going to be reviewing the External Examiner's report. If you are new to my channel, it is 100% student-led, as we can see from today's question that was left in the actual description to one of my videos, so feel free to pose them there. And as you can see above me, I've got better at the editing, but well, we have some lovely usernames, but Passionate Tactician has put, please James, upload revision for F2. Well, we're going to be going through the External Examiner's report today, Passionate Tactician, but away from the actual name, this is going to help you because I'm going to review it top to bottom, go through my tutor tips as well. And for anyone who is new to the channel, I'm an ACCA qualified member from the UK, a current tutor as well, so we're going to be going through it from my perspective, from both as a student and a tutor, to help you out with your upcoming ACCA examination. If you are new here as well, feel free to subscribe. If you do so, you get access to all of my free materials when I upload them onto the channel. You are more than welcome to use them. It's all 100% student-led, as I said, so that you are more aware to actually help to pass your examinations. So, without any further ado, more than happy to get stuck into it. I'm going to go on the screen at the bottom. I've also put in the description to this video, as well, the link so you can access the External Examiner's report. So go down to the description, click it, you can follow it through with me. What we'll do is I'm going to go over to the next screen now. I'll be at the bottom and we're going to be going through it one by one. So get your pen and paper ready. We're going to go through it top to bottom and it's going to help you out as well. So without any further ado, 3, 2, 1, go. Okay, so now we're coming on to the actual External Examiner's report for the Management Accounting examination for your upcoming ACCA exam. As I said before, the actual link to this document is in the description of this video, so make the most of it. I'm at the bottom now, pen and paper at the ready, whatever works best for you. But I can hear you saying to me now, James, this is the External Examiner's report. Oh my word, that looks rather daunting on there. Where's this added value? Where's this sort of magic that you have from the channel that is going to help me pass my examinations from this? Well, oh gosh, did you think we were just going to go through it just like that? Not a chance. That is what you want on there. So, if you haven't got a pen and paper at the ready, I would highly recommend it now because we're going to be going through this top to bottom in loads of detail as well. But you can actually put your headphones in, be doing some cleaning around the house. I don't know. Whatever works best for you. It's a case of these are the main tips coming out of the External Examiner's report that I've picked up as a tutor now, and I'd be wanting to know if I was a student sitting this exam. So I'm going to take you through it top to bottom, my analysis. First things first, this is being marked by a computer, fully online. That is why there's no real method marks in this. It's a case of, first of all, get noted down. You have got to be specific with your answers, and this is coming onto the units. And also, if you haven't watched it already, I've done a top tips video, how to pass management accounting, the actual examination. Have a look on that. It is all to do with how it is going to be marked. So I'm going to go through it bit by bit as we go through, and these are the key things I picked up on as well. So in terms of the actual computer marking it, we've got format, we've got decimals, we've got roundings on there. These are all going to make massive impacts for you as well, that if you get one of the decimals the wrong way around or you don't answer it in the correct format, you get 0, okay? So what that means is there are potential zeros on a question in there where the answer might be 5,000. You would only need to put the 5 in the actual box because the examination, the actual format of the exam has already given you thousands on there. You've got to do loads of practice questions. That is going to be the main thing. The examination is 2 hours long, and I've put on there that it's 1.2 minutes per mark. One of the main things on here is time management on it. And there is also another key thing just to get jotted down. There is a completion status bar if you are new to this examination and the process as to how far along you are, rather than rushing through, making silly mistakes. And as you'll see when we go through here, read the question. Get that jotted down right now. Read the question thoroughly because that is one of the fundamental areas where students make mistakes on this, because it is multiple choice on there. There are different ways of examining it, and those are the ways that they make silly mistakes. And Imagine you've got a bin at the front of your examination, just throw them marks in there, because that is what happens on every single examination paper for this. Students throw away marks. But by watching this, you are going to be fine. So we're going to have to go through this from what the externals said. So you'd think surely this is going to be beneficial. Well, you'd be surprised how many students do not read this as well. It was one of the fundamental things that I'd highly recommend for any ACCA student. And what they highlight in here are the strengths that students showed on the examination, but we're going to be focusing more on the weaknesses. And it's one of my favourite words that we see in every single external examiner's report that I review: constructive advice. In other words, yes, you've done things wrong. I'm going to tell you about it, but in a nice way, so it's okay. I'm allowed to say it out loud that these are the things, but we're going to go constructive. Just so you're aware as well, give or take, the pass rate on this is about 66%. So think about it like this, and this will be my psychological aspect going into this that I definitely get written down here. 2 in 3 people are going to pass this exam. Do you want to be the 1 in 3 that fail? I'd have that written down on the front of my folder so that every time I saw that, I just went, I don't want to be one of the 3, that 1 in 3 that fail it. I want to be in the 2 out of 3 that pass it. And psychologically, you'll see that written down, and it's going to get you studying straight away. So you've got a felt tip pen, something that's going to be permanent. Write it on the front of your folder. It will help you. Trust me. Broken down into 2 areas, as you can see on here. So we've got section A for 70 marks. Now that might sound like a lot, but it's 35 objective test questions on there, all worth 2 marks each. Main thing to get jotted down here is you're either going to get them right or you're going to get them wrong. This is where you need to read the question thoroughly, pick out the key buzzwords, which we've got examples below as well we're going to go through, and it's an area where there will be mistakes in this as well. Again, have a look at my actual tips to actually pass this exam. I've done another video, it's in the description to this video, how to approach this with the time management and your focus as well going into it. This leads on to section B as well, where it actually contains 3 multitask questions, the MTQs, all worth 10 marks each, and they tell you what they are based on. We're going to come to that later on into the video, so keep your pen and paper at the ready for that one. Massive thing on there. We've got a pilot paper as well that is available on the ACCA website, so make sure you check it out. It's free to go and have a look at as well. It's all to benefit you going into the 2-round exam, but for section A, section B, how you get on, how you approach it as well, fundamentally. Plus, with the tips on the channel, if you haven't seen them already, go check them out after this. Feel free to subscribe so you get the updates when I post them as well. They are going to help you. But without any further ado, I mean, this video I'm recording now Sunday afternoon. I'm still going on it as well. It's 5-6 o'clock here. Whoa, still recording away. Bit of management accounting. I'm excited for it. So we're going to go through it now. Section A. First things first, 6 key areas that you could be tested on in section A. So you've got multiple choice, pretty standard on there. Multiple response, pretty standard on there. And again, multiple response matching. Do they actually align as well? Are they in the same area? So you've got plenty multiple choice, you've got numerous answers, you've got to pick out the right one or the wrong one on there, depending on the wording of the question. Number entry, pretty standard on there, and then the new aspects, we've got gap fills, that could be a sentence or an actual equation, and then finally on there, hotspot, which is actually clicking on an actual image or diagram or graph on there to indicate to the marker where you think the scenario is referring to as well. So make sure you've got down those 6 areas when you're going through the practice questions, trying to align them up as to, well, you can work out the multiple choice ones, but it's a case of so you're aware what type of questions you're going to be tested on, and maybe you might have a weakness in one of those areas where maybe you just need to read the question through a bit more slowly, understand the key terms, and before you know it, these are going to be the improvements that are going to get you a pass on this examination. But really fundamental things there I would want as well. I've just realised I'm getting too keen on here as well. Look at that underlining on there. Candidates' performance on the calculation questions is normally worse than on the narrative questions as well. Okay, well, that's interesting. Well, we're gonna have to have a look on that for the calculations as we go through. That we're gonna have to look at the pro formas, and they've highlighted on here on the external examiner's report which calculation questions you should be prepared for as well, because they're the ones that students get it wrong on. But again, not to spoil the fun, we're gonna come on to that. So let's keep going through. So we're going to go through some actual examples now for section A. So if it was actually a multiple choice question as well, and I'll walk you through it how I would be approaching this question. What would I be thinking as well? And I've also put my notes on here. So if you watched one of my videos before, make sure you get them jotted down. If you've got the document open with you, pop them down as well. That is going to help you vastly going through it as well. So we've got on here which costing technique allocates cost to products such as design, production, distribution, maintenance, marketing, and disposal in order to maximize return and minimize costs. So as I was reading that through when I was doing the notes for this, I thought, well, that timeline there, we've got costs that are from the start of production all the way to the end and disposal as well. So you've got to consider a sort of timeline effect on here and try to visualize a scenario for sort of actually what type of costs do we actually have in here, because as you can see on the choices, we've got traditional absorption costing, activity-based costing, target costing, and life cycle costing. So automatically I'm thinking that life cycle, well, I'm thinking, well, that's start to finish, there's going to be different areas as well. But it's also going to pull out a technique that you can work on now as to, you go through the options and you say, it's definitely not that one, okay? So this is where we're going to come into the actual analysis going through. There wasn't a key word on this one, or a buzzword as I like to call them, but we're going to go through it now as to, you're going to work it through, and we'll go through the actual answer analysis as to, well, saying that is a complete not a chance that is the answer. This is the technique that you need to develop when you're going into the examination. There'll be questions that throw you off. We think, oh, it could be that one, it could be this one. But these sort of techniques, you'll be able to work it out because we've just looked at those expenses, everything from the design process to the marketing. So it's from the selection start to finish on there as well. Because if we go through, and we've got on here the actual question where it covers in the syllabus. We're going to come on to the syllabus later, but this is from the budgeting section. And trust me, if you've not gone through the budgeting section, you're at a major disadvantage going into this exam. So we know the actual correct answer is the actual life cycle costing, because it's going to cover many areas as well. But this is the elimination technique as I put it down on the notes here as well. So as you can see on my numbers on the left hand side, feel free to put this in your notes as well, as to they've gone through each of the three ones that are not the right answer. Okay, and this is the technique you need to be building in your mind going into this exam, because first of all we had traditional absorption costing, and this is where the alarm bells have got to be ringing to you that absorption costing assigns the direct costs and the production costs of the units, ignoring costs such as design and disposal. So when you think of absorption costing as I do, I only think of the direct costs wholly linking to making that product and the production overheads as well. So in other words, to actually get that product to market, that is the absorption costing rather than the actual design or the disposal of it. So that was a complete, not considering all the costs, not a chance. You are not the right answer on there. But actually start to visualize, we'll come on to this later on as well, actually a production line that you are comfortable with. Maybe you've worked in that production line, or you can visualize yourself going to work in a particular manufacturing line. So it could be the car industry, for example. So the actual design and the marketing plans on here with maybe agencies, they'd have been a cost relating to the actual good going to market, but they are not directly attributed to making the goods, are they? So that's the first thing on here. Next on here, we've got the activity-based costing. So you've got to think, first of all, activity-based is the trigger term on here in terms of, well, it's got to be to actually producing those goods. So we've got cost drivers on here, was the key word I've highlighted in the answer analysis, with the organization's activities. So it does link into absorption costing, where it usually focuses on the production costs, but again, as ever, it often ignores those other aspects such as the design and disposal costs. So not considering all the costs stated in the requirement. That key thing, that key phrase on there, stated in the requirement. Make sure you get that down, because again, I'm referring back to what they were asking me. I'm answering the question that they are giving us as well. That is paramount that you need to be aware of. So coming on to the final answer, that is a complete not a chance. So we've got on here for my notes the actual different approach to costing. So as we come on to the target involved, so what it's again, pop it down in your notes on this. Setting a target cost. This is target costing on it. So, but we're looking from a desired profit margin perspective. So, linking back to the requirement, we had costs that we're listing from the actual life cycle of the product, start to finish, or disposal on there. So this is from a competitive market price. So it really isn't focused to what the requirement was asking for. It is not the right answer for us. Can you see how we're talking it through and you're actually agreeing with yourself to say, these three options we've gone through do not link back to the requirement and what I'm given in the question. Which of course nicely leads us on to the actual life cycle on here, as you can see on the screen. So it tracks and accumulates costs and revenues across the entire life cycle, the measurement of products' profitability over its entire life. So when you see these things, it's costs, as you saw in the requirement, top to bottom, all stated in there, and it's a case of it is the one that fits the bill. But can you see how he eliminated those three at the start? That you may have known the life cycle costing technique. Brilliant, big tick, nice and easy, move straight on, 15 seconds on this question. But there will be questions on the examination that you may think there could be two, possibly three answers, and you've got to eliminate it. So get down those notes as I've talked it through and apply that to different scenarios. The more practice you do, the better, especially with that one there. So coming on to example 2 now. This again relates to actual standard costing as well. This is for syllabus area D. I'm going to show you the actual syllabus area at the end of this video as well, where you can access the free resource on ACCA's website. So hang on in there as well. But the key thing on here was, as you can see on the left hand side, is identify the key term. The key term was the flexed budget as well, where for net profit of an 80% capacity. Now, as I'll talk you through the actual question. So a firm sets its fixed budget at 100% capacity, and this is where you've got to be visualizing from a business perspective. So we've got a budget. You and I are the management accountants. We've done the budget, and we are at 100% capacity. So I'm thinking there that the manufacturing plant that we've got is bursting. You can't have any more going out of it. Okay. This is where you've got to have really good fundamental profit and loss analysis of this as well. So the budgeted sales are 300,000. So if you haven't got it jotted down already, this is a key pro forma on the right hand side that we're going to refer to in a moment. So 300,000 in sales and budgeted net profit of 50,000. So in other words, 300,000 less 250,000 dollars worth of cost gives us a net profit of $50,000. Budgeted costs are 70% fixed, 30% variable. So then you've got to be thinking, well, of that $250,000, 70% of them are fixed, 30% are variable. So calculations are already going on in my mind what I need to be doing, and hopefully they are for you. So coming down to the actual requirement, what is the flex budget for a net profit at 80% capacity? So we're at 100, we've got to go down to 80. So let me pull it down now on here. We've got the correct answer of 5,000. Obviously, I'm just highlighting it to you so you're aware, but you're going to get more value out of us going through the pro forma. So the revenue less the variable cost is going to give us our contribution. Deduct the fixed cost, that gives us our profit or loss. So in other words, that 5,000 there with the tick is our profit at the bottom here. Make sure you get down that pro forma. It is going to save your life. That is highly important, especially for this question and various others. So let me take you down through it for the flexing of the budget with £5,000. So changing revenues, changing costs on here. We're actually looking at the actual volumes, maintaining the fixed costs to their original level. So in other words, as I like to try and keep it nice and simple, i.e. we're at 100% capacity in this case. We need to look now at where we need to apportion and going to the 80% as we were indicated. So the total cost, this is where the workings are, so you can see on my note on the left there. So the total cost was $250,000 as we pointed out, but this is where ACCA have made a small error. In fact, they made two errors, but obviously I'm going to email them so they're aware. But as you can see on there, it should be 50,000 on the side there, not 5,000. And then obviously coming onto it later, I'll highlight another one. But it should be 300,000 less the 50,000 gives you your total cost. Then you've got that 30%, 70%. So notice my notes on the bottom here. Variable cost was 75,000 when we've multiplied it by the 30%, and the fixed element was 175,000. That is going to remain fixed. So the second point there, fixed cost. But that is the figure there, which should be $50,000. Okay. Coming down to the 80% capacity. Now, that paragraph on there, unfortunately, has a slight mistake because it should be $300,000. That was the actual revenue up here, minus the 75,000 for the actual variable on there. But focus on my notes on the side there, the step by step, nice and easy. So we've worked out that from the revenue minus our variable costs, that gives us $225,000 on there. We're now working at 80% capacity, so basing that on the contribution as well. 80% capacity means that our contribution now is only $180,000, okay? So before, at 100%, it was $225,000, but at 80% now, we're at $180,000. You can see that on step 2. Then you're going to say, well, we've got fixed costs because they must always remain the same. Deduct off the $175,000, giving us a profit of $5,000 on there. That is fundamental, just knowing that step as it went down. So it assumes that all the costs are going to be reduced. This is where people went wrong, or students went wrong on this question itself. The fixed costs are fixed. Make sure you get that written down because it's a common error. If you're not aware that fixed costs are fixed, you are most likely not going to pass this exam. So one thing to make sure you've highlighted, and on points 3 and 4 I've got on there, follow the pro forma, and then the incorrect allocation of the percentage as well. If you can understand the pro forma that we had on the revenue, less your variable costs, gives you your contribution margin, then deduct off your fixed costs is going to give you your profit or loss. The pro forma's up above, rewind the video, go and find it, it'll help you. So that is example 2 on there now. Coming on to example 3, and this is one that involves, I believe it was MPV on this one, but the first tip, as you can see on the left, I put it on the screen as well, is draw a timeline out to give yourself a helping hand, because I'll admit, even when I went through this as well, I started to put down 5,000 on each year. Then I reread the question again, I thought, oh no, it's actually 1,000 for the next 5 years. Small mistakes like that can happen. But look at the timeline on there, it actually just puts it in perspective that plans to invest 5,000 over the next 5 years, and then we've actually got a rate on there of 8%. Another note on there I put, when I see that rate of 8%, you've got to be thinking straight away PV factor tables. But we'll come on to that in a second, how to work it out. So the area of the syllabus for this is area D, so the budgeting, the time value of money, compound interest. If you don't know about compound interest, go on to other videos online and put it in. It is a fundamental, paramount concept that you need to know about. The correct answer on here was $6,336. So that is what the value is as at today of the future value. But there are 2 potential ways to actually work this out. So the first way was using a scientific calculator. But the main thing to get jotted down here, if you're thinking about buying one as well, make sure you know how to program it, because you need practice going through past paper questions as well. That is going to be fundamental, that you're bringing those $1,000 amounts to the present value, taking into account the time value of money. Great function to put in, but if you get it wrong, you get it wrong. So more practice on there. And point number 2, using the PV factor tables or the present value tables. These are given to you in the reference tab. Make sure we get that jotted down on the actual format for the online test. So practice these before you go in, understand where the percentages are and where the actual dates are in terms of number of years. That is going to be fundamental to bring those to the actual present value on here. And just to highlight as well, that there was a slight difference in terms of the numbers. So if you use the present value tables, you got 6,332, whereas if you use the scientific calculator, you got 6,336. So there's a $4 swing on this. The reason for this is because of the decimal places used in the process. So if you use the PV factor tables, you use less numbers, and hence you actually become just slightly out. Both, just a highlight for you on here, even though there is slight bits of rounding, both would have been accepted by the actual marker as well. The main tip here to get down is focus on what works best for you and being able to actually use the resources provided to you as well. The PV factor tables are there to help you. They're on the exam, they are there. It's up to you as a student to get familiar with them and know how to apply them into what scenario of question as well. So that is example number 3. Some really good tips on that one as well. Because MPV is difficult and students tend to get it wrong as well, as we'll come on to later on. But coming on to example 4 now. So this is another one in terms of actual sales, and this is a case of you've got to visualize, as you can see on my note on the side there, trying to picture what is going on and imagine if this was your actual business, how this functioned. The more you can imagine it and picture it in your own scenario, the better chance you have of understanding the concepts and what is going on. So we've got to work out when we receive the money at a particular point in time. So what we'll do is we'll just walk you through it as well. So the cash sales of a company are 10% of the total sales revenue, with the remainder on credit. So in other words, what it means by credit, because I know where people are doing debits and credits as well on here and they're thinking tier counts. Just think when it's on credit, it's a case of you've got the products that you've made, you've sent them to your actual customer, you've sent them the invoice, okay, and they haven't paid you back yet. Okay, the product's gone to them and they've been sold on credit to them. They still owe you the money back. Okay, try and think of it like that. That in the old days, they'd have got the actual credits, actual invoice sent to them, and they've got the invoice, put the payment on there, and then it probably been sent back and then paid. That's it. But it's goods sold on credit. That they've received the goods and they're still due to pay back. But we have some other logistics we have to take into account here. So 40%, and this is really where you've got to be careful, and in an exam like this where detail is going to be critical, not to make small mistakes, 40% in the month of sales, net of 2% discount. Okay, so discount on the 40%, and the other 60% is in the month after the sale. So we get 40% now in this month with a 2% settlement discount, 60% in the month after. We've been given the figures, 80,000, then 70,000, and the cash customers do not receive a discount. Bit harsh on there, but don't miss out on the other notes. This is another key aspect, especially in your practice paper questions. So let's work this through, because what's the amount we will be budgeted to receive from the customers in month 2? Okay, so month 2 perspective. So we're going to have some income from month 1 and then some income from month 2. Some cash and some on credit as well. But let's work it through. These are the notes that I had down. And again, as ever, this is coming from the syllabus area of budgeting. So if you haven't got budgeting on your list to go away from today, you'd be at a severe disadvantage. We've got the correct answer, $74,896. But the key thing I've got right on here, because you've got 2 different periods, and again, this is in my tip video that I've also done on the channel, it's a case of we've got to split out month 1 and month 2. So have a look on the left-hand side. I've got there month 1 for the receipts, and then month 2 below that. So we've got the receipts from month 1, and be careful where you're allocating the 80,000 and the 70,000. So we've actually got on here, it's multiplied by 90%, because remember, 10% was actually on cash as well. And this is the 60% that is going to be received in the month after, so for month 2. So that's the first split we've now forgotten about. We don't need to consider anything else from month 1. These are the amounts that are received in the following month, which is month 2. Nice and simple. So now we've got to come on to the slightly more technical issue of what happened in month 2, where we're currently at. Well, month 2, we've got some cash sales, we've got some credit sales. The cash sales, as we know, 10%, no discount. And that was the fundamental thing here. So that relates to our $7,000. You can tell I'm from the UK, but you've got to be careful on it though, because if you put dollars, that is correct. You put pounds, that's incorrect. But the 70,000, we've now got to consider what did we actually receive this month. So remember, 40% of it is actually received this month. 90% of that is actually on credit because the other 10% is on went in cash. And notice on there the 98%. That is to take into account the 2% actual discount rate as well. So that gives us our $24,696 added to the other two receipts, giving us a total for month 2 of $74,896. Make sure the key things on here, split out the different periods. You've got a much better chance in your workings of getting this correct. So that is number 4 with the actual technique and the area going through it. Plenty of notes to get down on there, but that would be the way I would approach it. But that's all from the working perspective on here now. So we're coming on to example 5, and again, this is still actually for section A on here, and we've got a graph on here now as well. But we've got to describe it and what is actually happening. So the discounted values of a capital investment project are shown on the following chart. Okay, lovely. The cost of capital is 15%. Okay, right. Next thing is, if you get a graph on this examination paper, the first thing I'm going to be doing is I've got to understand what is going on this graph. So you've got to look on the actual x-axis and the y-axis, so horizontal and vertical on there as well. And as you can see on the left-hand side, it was NPV on the side there, so the net present value, and it starts in a positive starting point, $120,000. But when I see NPV positive, that means that the project is going to create a positive actual outcome of it, of $120,000. But as I can see on the x-axis on here, we've actually got the discount rate in terms of a percentage, and it crosses out, give or take, the number 13. Okay, so let's have a look at the statements they've got on here. So are the following statements relating to the chart above true or false? The capital investment amount is $120,000. Okay. And the IRR is more than 15%. Well, straight away, I'm thinking there, well, the first one's definitely wrong, but I'm going to we'll pull it down onto, and just remember the graph before we go on to it as well, where it crossed at 13. And both of them are false, by the way. Straight away, just doesn't sound right at all. But these are the explanations where we're going to add some value on here. But if you analyse the axis, as you can see on the left-hand side of my notes, this is where it really helped in terms of the budgeting for this and understanding what was going on. So this comes from syllabus area, from the actual budgeting, capital budgeting, discounted cash flows, bringing it back to the present value. But you're more interested in why they are not right, okay? So statement 1 is not right because on the y-axis, as we stated, it's got $120,000, okay? So it's got the same figure, but it's at a discount rate of 0% on there. So this is the outcome of, we're expecting an outcome of $120,000 on here because that's where the curve intersects. So it's a case of it's not the initial investment. That was the key thing on here that it was stating. It doesn't relate to the actual graph in itself. The actual statement on here, the capital investment amount is $120,000. Well, that isn't what is showed on the actual diagram. It's telling us the project at a discount rate of 0% is going to get us $120,000. So that is why it's incorrect, because we've analysed the axis properly. Next, coming on to statement 2 now. We're still going. You better be with me now. This is important. Statement 2 is false because the IRR represents the discount rate, okay, that would result in an NPV of 0. Now, for this exam, if you make sure you've got that jotted down. NPV of 0 is where the IRR is represented. By inspecting the graph on here, the IRR is at 13%. Remember, we looked at that straight away. So that has to be false. It intersects at a different point altogether. Another keyword to get on there is interpolation, because that is another keyword that links to IRR and how we actually get to the NPV of 0. But as we could see from the diagram, we analyse the axis correctly. It can't possibly be on there. It's at 13. And yes, as we saw in the statement on here, the IRR is more than 15%. Well, no, we've got the IRR at 13 on here. 15's down here where we've got a negative MPV. Incorrect. And there we go. Justifying it to yourself, talking yourself through it, and demonstrating your knowledge. That's the key thing here. Whew. Deep breath, James. One more example for the viewers out there. It's okay. I'm keeping going. You better still be with me. It's okay. So example 6 now, and notice how I'm now highlighting some of the key terms on here. These are fundamental buzzwords you need to be aware of, but I'm going to walk you through it as well, so you're going to get some more added value on this. So primary data is usually less expensive to produce than secondary data because it is available from within the organization. Okay, right. Number 2, all data can be classified as either discrete or continuous. Right, are the above statements about the data true or false? Okay, so we'll start off where this relates to as well. So syllabus area A, so the nature, source and purpose of management information. This is all about data, how it's used within the role of a management accountant. Fundamentally, first of all, okay, both statements are false. But I'm going to walk you through why they are false now. So pen and paper again at the ready. We're going to go through the answers. Let me scroll it up for you on here. So both statements are false, we're aware of that. Primary data and secondary data. Okay, just pop this down, keep it simple for yourself. Primary data, imagine it was you or I having to go out with a pen and paper and a questionnaire, go out into the world, go and collect the data, go and input it ourselves, go and work out what it all meant, and then coming to find some results. Okay, that is us putting out time, money, effort, all into getting these results. Secondary data, on the other hand, is, say for example, if you or I went on the internet and wanted to find the financial statements of Ford Motor Car, or of Walmart, or of Apple. Okay, that is secondary data, second hand. It's been collected by the companies, all put together, so it's going to be less expensive, isn't it? I'm not having to do anything for that. It's the same thing here. They're trying to argue that primary data is cheaper than secondary data, which is completely untrue. But again, can you see how I'm trying to visualize examples here to make it crystal clear for you? And that is going to be a massive tick, so you get it right. Statement 2. We've the external examiner put on numerical data can be classified as discrete or continuous. But the thing on here is, there are some bits of data that you just can't keep as discrete or continuous, such as customer opinions. The one word I had to get down on here was there are things that are judgmental or descriptive they put on here, so it's got to be false because things can be just plucked out of the air because it is what someone actually thinks in terms of it. So it's not just going to be a number on those sides. So that is why it just can't possibly be true, and hence it is incorrect on there as well, or the statement is false. That's the main thing. Whew, that is section A. Aren't you lucky? Gosh, I've gone through all of those examples, why they're incorrect, with some actual exam technique on there as well. But stay with me, because section B could be the reason why you pass this exam or fail the exam. But we don't think like that on the channel. So let's go through it. Positive mind, keep that pen and paper going, and it will be alright as we go through it. So you can see as we've been going through, we've had the syllabus areas noted on here as well. So the main things on here, we've got management information, nature, source and purpose is syllabus area A. And depending on which provider you have, some are sort of interlined with others, but these are the generic overview ones, where syllabus area B is data analysis, statistical techniques, cost accounting techniques as well, with budgeting, standard costing and performance measurement on there. This is the bit of added value, massive. It's in the description of this video below. This is the actual syllabus and study guide, and they update it year on year. Highly recommend for you to go through this, and you can scroll through. It's got loads in here in terms of how the exam is set up. This is the syllabus where I'd recommend that you go through this, check it off one by one. Are you comfortable with the actual process on here and the areas that could be examined? I'd be going through all of these one by one, and if I didn't know what it was, refer back to my study text and you're on to a winner. An underused resource, massive for you, I would say, going through this. But that is one fundamental note. Highlight it, circle it, put it in red, I don't mind. The next thing is Section B. The external examiner, and this is massive, has told you Section B contains 3 questions, one from each of the syllabus areas. So in other words, the external is telling you right now, if you don't know about budgeting, you don't know about standard costing, and you don't know about performance measurement, you can say goodbye to 30 marks on this exam, and they can also be tested in Section A. But you know they can be focused down. Keep doing the past paper questions as well. And that is going to be really, really helpful for you because you can narrow down your actual revision on this. Now, where are the common problem areas? And if you've not got a pen and paper ready for this now, this is where they've been tested in the past and they will test you again. So the inability to calculate payback, NPV, IRR, so that's PV factor tables, and also how it's put in terms of the fractions. Use a table for the payback method as well, number of years, cash flow for that year as well, and how much it accumulates year on year as well. That would be my layout for there. Standard costing variances, what we actually had versus what we predicted on there, residual income and return on capital employed. If your figures look ridiculously out of place, you have made a mistake on here. There was also an apparent difficulty with questions presented in spreadsheet format, or in other words, reading between the lines, not enough past paper exam question practice. So make sure the more you're doing, the better, and give it time. Just keep it going. Get a sheet where if you make any silly mistakes, jot them down, just keep them on there and keep referring back to them so you don't make them again. But they'd be the fundamental areas I would be spending a lot of time on because they will be tested again. They are fundamental to other core areas for ACCA, so you have to know that. So we've got actually another breakdown on here from the examiner where they stated that there are going to be questions where you're going to have 4 questions where it might be just sort of yes or no, but it'll only be for 1 mark. So what they actually are getting at on here is that maybe if you actually answered 2 of them right and got 2 of them wrong, you would get 0.25 marks for each one you got right. So you get half a mark for that as well. So in the past it'd be a case of if you got 1 wrong, you'd get 0, whereas now they're awarding the half mark. So just keep going, make sure you answer them all, and just think clearly on it as well. Difficulty with questions involving the reconciliation of the actual and budgeted figures via standard costing variances. Again, it's going to be question practice, but just try and lay it out. Just keep it simple for yourself. Have the actual, have the budgeted, and then have another column on the end, positive and negative. Are we better or worse off? And then that is going to show your differences in the standard costing variances. Just think about it. Variances is just a case of did it work out better for us or did it actually not, and are we in a worse situation? Just try to keep it simple for yourself. And finally, but not least, future candidates. Like the ones listening in now. Oh, this will be good. I think keep your hand going on this one. Future candidates are advised to study the whole syllabus, as I stated in my actual best ways to actually pass this exam, because the paper can consider the full lot. So it's not as if you can miss out one of the areas. It is paramount you cover all of them. Okay. They can test you on anything. Practice as many test questions as possible. That is a gimme. If you've watched any videos on my channel, that is an absolute must. The more past paper practice questions you do, the better. Okay. Number entry questions appear to be a weakness. So again, just get that jotted down. Number entry questions. That means people are putting the numbers in the wrong format, wrong decimal places, potentially with commas as well. These are continuous areas where people make mistakes, and especially under the exam pressure. Read questions carefully, as we mentioned at the start of the actual video itself, because it's a 2-hour examination. You're going through with a mouse and clicker. If you have a look at my other video in terms of the best ways to pass this, I don't actually recommend that you do it on a sort of 1.2 minutes per mark basis. you need to break up the exam to do section A and revisit it twice, and section B and revisit it twice, so that you go and you try to maximize your energy as well and pick up on more mistakes, because so many students will just do section A and section B and then press submit, and then that'll be it, when they've made loads of mistakes through it. Think about it like this: the longer you go into the exam, the more energy you're putting into it, the more concentration. So actually, it goes down, your energy levels go down the further you go into it, and what happens if your energy levels go down in the exam? You're more likely to make a mistake. So that's the way it's come into it. So I'm looking to optimize you not making as many mistakes. But watch the video, it'll help you. Trust me on it. It's what I would do. That's what the video is called. Next point on here, so we've read the questions properly. Ensure that the calculations are complete as well. Not doing the full thing. Why would you do half a calculation? Before selecting their answers for a multiple choice question, show it all on there. Try to attempt the easy questions first. Key thing on here is, if you really don't know the actual question answer, you can flag it on the system, and I'd be only using that flagging function if it's a case of I've no idea. It's not worth my time now. I'm going to get on with the questions that I do know, the easy ones they've said on here, and not to spend too much time on the difficult ones. But you have to be honest with yourself that you've got to say, there will be questions on this exam that I don't know, or I'm a bit confused about. Just flag it, come back later, deep breaths, clear mind, critical mindset, and you've got a better chance of answering it correctly as well. That would be my approach for it on here. So we've got attempt all questions in the examination. There are no negative marks, which I just think as a tutor it just makes me want to hit my head, that some people would rather not answer the question than get it wrong. Pop it down, have a reasonable approach, try and work it through, but it comes down to it at the end of the day, the more studying you do, the more past paper questions, and the more mistakes you make on this exam in your revision to learn from them again, the better off you're going to be. We've also got down on here, consider reasonableness as well. So they gave the example of inventory days figure being 27 million days is unlikely. I do fear that a student has actually probably put that down as an answer. That's why they've actually referred to it. But inventory days is likely to be maybe 30 days, something on those lines, depending on the type of business, not 27 million. So just think it through in terms of when you're analysing your questions and your answers, what looks reasonable based on the information you're provided with. And nicely on there, read the previous examiner's reports. So some mistakes are going to be the same year on year on year. Their resources are on there for you for free. It is only going to benefit you going into your exam, so make the most of it as well. I've also put down here some other key tips that I've picked up on from going through questions as well, that I just couldn't complete this video without telling you. So again, pen and paper at the ready on here. There are collapsible sections on the online format, which is absolutely great. What it means there is you can have the scenario up on your screen with, say, if you've got requirement C. So usually requirement A, B and C. A and B might take up a bit too much space. You can't see all the scenario that you need to refer back to. You can collapse those and you can actually see it better. Brilliant. Pick up on it in your practice, but heed the warning as well. Make sure you answer all of the requirement when you're going through it, because it's happened in the past where some students have collapsed it, forgot to fill them in, submitted it, and basically if you haven't wrote anything in there, then you're going to get nil point, I'm afraid. Okay. The next things to get down on here are the units will be given. So you've got to be you heard me getting pounds and dollars mixed up earlier. But the units, percentage, dollars, pounds, whatever it is, they'll be given in the boxes actually on there. So you have your box that you have to fill in, and it'll have a pound sign or a dollar or whatever units or percentages. You don't need to put that in the actual box in your answer. It's already given for you. They're just interested in you putting down the correct number to the correct decimal places. And hence why I've got on the next line, careful what you type in, because in some cases I've seen questions where you don't need commas on this. They just want the numbers, but they've also put on the actual online, on the online system, shall we say, the actual zeros on there. So what's that? What it's saying there is thousands of units. So if the answer to this question was 10,000 units, all you need to put in the box is 10 because the thousands of units was provided on the software. If you'd have put 10,000 in the box, yes, you and I know you've got the right answer, but it's not the right answer to fill in on the software. Okay, pick up on it on your question practice, and everyone will make a mistake on this, trust me, but it's all how you recover from it. Careful on the wording. This comes down to your question analysis, picking up on those buzzwords as well. As to, are you required to actually put down a whole number? Are there decimal places? Just read it through and make sure you have a sheet where you write down all of your actual mistakes from going through on these past paper questions as well. They'll keep coming up, but you'll start to see over the weeks that list will start to decrease because you won't make them again. But it's all there so that it reminds you. Errors include other things such as periods, quarters, dates, year ends. So it could be you're referring to quarter 2 in requirement 1, and then you might be referring to quarter 3 in requirement 3. I don't know, something on those lines. But it's a case of make sure you are aware of what year you're actually referring to, what period, what quarter, and it's just so you focus, so you know what time period you're in. It comes up every single year on there. We've had adverse and favourable, so you don't actually need to put the plus or the minuses in. It shows you on the boxes on there. You just need to put in the number, and if you put favourable, the system knows you've got that down as positive. If you've put down adverse, then it means it's negative. You don't need to be putting pluses and minuses in the box. They just want the number. We've also got, don't forget the references, so you've got the actual formulae in there and the tables, so that was from the PV factor tables. You need them to calculate the IRR and the MPV. The external examiner has already said up above as we've had a look at it, students get this area wrong, so heed the warning on that. And finally, something which I thought was really interesting from one of the past paper questions that I looked at, so I read it through, went, the final bit of this requirement has nothing to do with the scenario, but it's a case of on this examination the externals have stated it before, do not get overwhelmed by it. They've done it before, it's a case that they can just test the whole syllabus, but you could have a requirement where it has nothing to do with the scenario you've just read. As well, it's usually the final part, but it's one of the key things that you just need to be aware of so that you're on top of it and it's not going to flummox you going into that exam as well. Whew. And breathe. That is how you go through it, top to bottom as well. Oh, is your hand okay? Is your hand all right? Plenty of notes going through? I think that was beneficial. Gosh. Well, anyway, that is in my eyes how you go through it, top to bottom. But let's hop back to the main screen now for one more final point. Let's go. Well, that in my eyes is how you should be analysing an external examiner's report, top to bottom, with my experience as well. That is going to help you with your upcoming F2 or Management Accounting paper for ACCA. If you follow these tips, go through the practice questions in your examination and in your revision, you will be fine. If you found today's video helpful, feel free to give it a massive thumbs up as well. If you are new to the channel, feel free to hit the subscribe button below so you get all of my free resources. And if you've got any questions you'd like to ask me, I answer absolutely every single comment in the bottom as the passionate tactician found out today, because today's video is dedicated to them. So I really hope today's video has helped you out, and if you've got any queries about your upcoming ACCA examination, feel free to put it in the description below. I'll answer it and we'll do some more videos as well to help you out. Well, the final thing I can say is best of luck with your upcoming Management Accounting and F2 examination. I really hope the tips have helped you go through it. But as always on that bombshell, I'll see you next time. Cheers!